All four AI lenses said sell on AMD. Here's why the methodology said hold. There was a unanimous sell on AMD. All four lenses agreed. The auditor, the architect, storyteller, and sentinel. And the methodology still said hold. Here's what the dissent revealed. Four independent lenses, each one reads exactly the same SEC filings through a completely different framework. The auditor tears apart the numbers. The architect maps competitive position, and the storyteller stress tests management's narrative. The sentinel then scans for what breaks. They're really not designed to agree. On AMD, they all hit sell. Revenue concentration, the AI CapEx cycle, footnotes buried deep inside the 10K that tell a different story than the earnings call. The data was loud enough that four completely independent frameworks, four different ways of reading the same filing, all pointed in one direction. And I still said hold, because when all the machines agree, and they almost never do, that certainly isn't a signal to act. It's a signal to dig. The most dangerous mode of agreement is the one nobody questions. This methodology was built to question all of them. Here's what the lenses see in AMD's filings that the street missed, and why the methodology pushed back on a unanimous sell. We have two ways to value any stock. One is a discounted cash flow. You project every dollar the company will ever generate and discount it back to today. That's intrinsic value, what the business is actually worth. Two peer multiples, you look at what the market pays for similar companies and apply that multiple. That's relative value, what the market says it's worth. DCF gives you a number from the inside out. Multiples give you a number from the outside in. They really agree. On AMD, neither agreed with the sell side and neither agreed with each other. The methodology runs on four independent AI lenses. The auditor, it tears apart the financial statements. The architect, it maps what disclosure language actually reveals. And the storyteller, it stress tests what management leaves out. The sentinel, it scans for what breaks outside the filing. Four lenses, four totally different ways to read the same document. They're really not supposed to agree. Valuation is not a number, it's an argument. And every argument starts with the question you choose to ask. Discounted cash flow asks one question. What's the company worth if I forecast every dollar it will generate years out, a decade out, and discount those future dollars back to today? The discount rate is the cost of wait, certainty, higher rate, and lower value. At the end of the forecast, you attach a terminal value and the business is worth after your projection window closes. The number is enormous. It dominates the entire model. Get the terminal assumptions wrong and you get everything wrong. Then we have peer multiples as something totally different. Not what a company is worth, what the market already pays for companies like it. P to E, EV to revenue, EV to EBITDA. You build a cohort, the same sector, similar size, comparable growth profiles, and you measure the spread. Where does this company trade relative to its peers? Above the average, below the average, or in line? Run both on the same company, same day, same price. Two different answers, not because one method is broken, but because they answer different questions. DCF values the business, multiples value the market mood. On DCF, on AMD, the DCF said one thing, pure multiples said a number. The sell side consensus said a third. Three verdicts, one stock, none of them overlapped. That's when the four lenses went to work. So yes, AMD beat guidance. AMD is the case study where the two methods diverged. All four lenses ran both methods. Both methods produced a clean, unanimous answer. They just disagreed with each other. The methodology had to decide what to do with the disagreement. So two methods, One stock, a DCF that pointed in one direction, peer multiples pointed in another. Normally you'd stop there. You'd pick your favorite method and move on, but that's not how this methodology works. All four lenses ran both methods independently. Each lens built its own DCF. Each lens constructed its own peer cohort. Each lens interrogated the assumptions the other three made. At the end of that process, all four lenses returned the same answer, sell, unanimous. That almost never happened. Four independent AI lenses, two fundamentally different valuation methods, one unanimous verdict. And the methodology still said hold. All four lenses agreed. AMD is expensive on the discounted cash flow. All four lenses ran the DCF. All four concluded the same thing. AMD is expensive. Now, the lenses did not agree on the discount rate. Three of them had built a company-specific cost of capital around 10.5%. One lens used the industry benchmark around 15. That's not a small gap. 100 basis points in the DCF rate, the discount rate, can swing a DCF by billions. And these lenses were nearly 500 basis points apart, yet the output did not change. Expensive at 10.5, expensive at 15, expensive at every rate in between. The DCF verdict was not close. It was not contingent upon which discount rate philosophy you preferred. Four lenses, four independent models, two fundamentally different anchors, one unanimous direction. AMD's current price based on growth assumptions that even the most generous lens could not justify. All four lenses agreed AMD is fair on peer valuations. So peer multiples told a different story. The same four lenses, the same AMD, a completely different answer. The cohort, ASML, Micron, Lam Research, ARM, Qualcomm, all five chip makers, different business models, same sector, same capital intensity, same cyclical exposure. AMD did not look expensive against that group. 60th percentile, middle of the pack. The same operational metrics. Rule of 40 at 56. Cash runway, growth trajectory. That DCF found insufficient. Next to other semiconductor companies that looked entirely reasonable. Not cheap, but not stretched. Here's the part the sell side would rather you not think about. The peer set was not handpicked. Each lens built its own cohort independently. Four lenses, four different peer sets, four independent rankings. Every single one placed AMD in the middle. All four lenses unanimous on DCF, expensive. All four lenses unanimous on peer multiples at fair. Two unanimous verdicts, same stock, same day, same price, refusing to agree with each other. And the methodology had to decide what to do with that. That's why we have hold with an asterisk. The methodology would not issue sell, not with the peer check return fair across the board. AMD traded at sector multiples, same ballpark as every other chip maker. The DCF looked bearish, but the bearishness washed across the entire cohort. Two unanimous verdicts, no overlap. The methodology did what it's designed to do. It refused to pick one and bury the other. Hold with an asterisk. The asterisk doesn't mean maybe. It means there are two answers here and you need both. The descent is the output. The methodology refused to publish sell because the peer comparison check came back fair. Same multiples as the rest of the semiconductor cohort. The DCF problem isn't AMD's, it's the whole sector's. So the methodologies landed on hold with an asterisk. The cash flow case is bearish. The relative case is neutral, with compressing those into one directional call would have papered over the actual disagreement. So even though AMD beat guidance, the methodology's job is to surface where the methods disagree, not to predict where the stock goes from here. The asterisk is the disclosure. Two methods, two different reads, both on the record. A clean directional call would have been wrong. Either way, it would have hidden the disagreement. Last Wednesday's piece walked through 5 modes of methodology disagreement. This is mode 5, cross-method discipline overruling a unanimous jury. What's the next ticker where the 2 methods disagree? The production calendar lives with the audience. Tell me where to look. Which name on your bench has a DCF and pure multiples telling different stories? Drop it in the comments. That's where the next case study could go. At the time of this recording, I do not hold any position in AMD. If you found this useful, like and subscribe. We have a free weekly newsletter at insightfulagents.ai/subscribe.